Hi, everyone, and welcome to this month, September's installment of your Daily Five. I am your host, Mish Schneider. And last week, actually for the August segment, we covered the basic macro picture, looking at the economic modern family. And I know that I mentioned to you that it was really extremely important, particularly to watch the transportation. And I followed it up by doing a whole segment on what if the transportation sector actually decides to play some catch up. Where are your opportunities? But a much bigger concern of mine has been for quite some time, something now that has become almost a mainstream word. And you know, because you've been listening to me for so long, I've been talking about it for like a year already. And that's the idea of this stagflation. I mean, everywhere you look, you hear about the low labor force, the supply chain, the weather problems, the rise in wages, the fact that people are going to be displaced from their apartments. All of this really, well, that's not necessarily inflationary, except that there are no places for people to live. So everything in terms of the cost of living has gone up. And meanwhile, the dollar, of course, is still weaker than where it's been, hasn't exactly fallen apart, but as I've discussed, isn't always necessarily the key to what creates a stagflation environment. And so with housing still on the rise and everything else I just mentioned, plus on the top of the fact that we still have a very high demand, some hoarding going on. We even had a good old-fashioned coup recently in Guinea. What's going to happen? What should we look at in terms of commodities? Because many of them have come down, creating some really good opportunities. So I decided to take a look at quite a few for you. And these are really going to be based on looking at metals, precious metals, miners, steel, and also copper, and then, of course, some of the wood and soft commodities. Okay, so let's start with gold. So now in terms of the gold, what you really have to think about with gold is that it's been underperforming now relative to definitely the Dow. If you just look at a price to price ratio going back from 1980 to now, the Dow is trading at about 35 times where the price of gold is, and that's roughly, and that's based on price, of course. If we're looking at the price of gold per ounce, it came up to about 1834 last week. It dropped this morning, and you can see that reflected here in GLD. But I am still extremely long-term bullish in gold. So I thought actually this is a very timely video because today you can see that gold drop right down to the 50-day moving average, and so far is holding it. And remember, we had a whole conversation last week. If you go back and listen to my Friday stock charts regular segment, I talked about how we added Bollinger Bands using 2 standard deviations for our plugins, as well as changing the standard deviation to 2 on our real motion indicator. And so what's interesting about gold is back here, when we had this bottom, you can see it cleared back over the Bollinger Band, which was important. At the same time, it had touched the Bollinger Band here and then never really broke down below it. It actually started to show a divergence here where it was going over the 50 before the price did. And now what's so interesting is we got right to the resistance here on the Bollinger Band. We didn't quite get it up here at that point, but we got close. And now, of course, we're seeing a little bit of the sell-off that's happening as a result. Now, if we take a look here at the whole picture, I think that we are definitely in a situation still where buying weakness in gold makes more sense. And of course, yields are going up today, as are the dollar, which is impacting it a little bit. But at some point, that narrative is going to change. So here, as we have so much support around the 166 level, I would do one of two things. I would either wait with some patience to see if we can get back down to 166, or if it does hold the 50-day moving average, as I'm talking to you on Tuesday, and then can get back through, let's say 169, then I think you still have a pretty good level of resistance. And with this, you need to hold on. You need to have some patience. We're still above the moving averages here on real motion. And of course, we're not showing much in the way of leadership. So this has hardly caught on as a mainstream idea yet. But I suppose that it's going to at some point, simply because it's going to be one of the few instruments left that people are going to realize is not only a good hedge in case we start to see that inflation really get out of control, but also, as I mentioned before, so completely undervalued compared to the overvaluations that we've seen in the stock market. Now, people ask me a lot about silver. I'm not as excited about silver. The classic way of thinking about silver, by the way, is that silver will outperform gold in inflationary times. And certainly we can see that hasn't happened yet. Here's how beautiful this 50-day moving average has served right now as resistance. If we go down to real motion, we had the same kind of thing here where we touched down on the Bollinger Band in the real motion. The price didn't quite get there. At the time when gold failed, so did this, and this held and came back through the Bollinger Band. So here was your first opportunity. However, you can see that it hasn't really yielded very much. So I think that 2120 right here, around this low, is your ultimate support level that has to hold. Would I be interested in gold and silver? I'd like to see gold break out about over 1840 an ounce. And then I believe that you would see this taking out the 50-day moving average, which might offer us another really good opportunity. Something to keep an eye on, but gold is much more in my interest. And of course, we're not going to cover the miners, but the miners also are not leading. And that's one of the reasons why. However, I want to switch more to a miner. This is a rare earth mineral mine, Mountain Pass, was a SPAC, turned into an IPO. Good stock, has been all over the place. And this too, so interesting with this real motion where it got back through the Bollinger Band right here, just as this was starting to clear back over the 200, offering a really good opportunity to get long. We actually got long a little bit down here. And today looked like today it was going to clear over the 50, but it didn't quite get there. It pierced above and now is come back down. So I'm looking at around 34 as kind of your midpoint. And at this point now, I still think longer term, this is a really good purchase. It's just a matter of money management as always. And if it holds 34, then I would be looking to see if this can clear for 2 days over the 50-day moving average. And of course, then you would have a pretty good risk down to about 34. The momentum is staying pretty good at this point. Obviously still has a ways to go, but nonetheless, it's holding over the zero line. The next one, switching, is over to US Steel. Now, US Steel has been somewhat frustrating as a trade because it looked like it was going to explode and then came all the way off. If we go down a real motion, it never quite cleared the 50-day moving average, showed a negative divergence here. However, we're starting to flatten out a momentum as we get closer to the 50-day moving average. So what that means to me is not only opportunity based on the moving average, but if you look at the Bollinger Band here, it comes in about 25.84. So that gives you a good risk point to under 25.44. So far as I'm talking to you, it's an inside day to Friday. So probably the most conservative would be to wait now for this to take out these levels at 27.60. And now you've got a good risk to under 25.40 to see if this can get going, which I believe with steel shortages and news on China is still a possibility. If we move over to copper, this is through Freeport McMoran. This looks a little bit different. We're still not above the 50. We kind of flatline on momentum, but our price is above the 50 and the mid-morning Bollinger Band. You could see down here the opportunity when this came back through the Bollinger Band, as this came back through too. But that doesn't mean this is dead by any means. I would be watching now with some patience to see if it holds this 50-day moving average. And you can see we've had a couple of attempts at highs here we haven't been able to get through. So probably most conservatively to be a buyer over 36.75 and risk, say, slightly under 35. And now let's go to wood, because lumber, which went nuts, went all the way down, and people said, that's it, we're going into deflation. And now look at wood. It's timber and forestry. It's a little different than actually buying lumber futures, but it's a good one for people who don't trade futures. Again, real motion now is starting, it's up, but not great in terms of the momentum, but the price, as we hit here, see how beautiful these are? This is why I keep saying get those ACP plugins, because you get these great mean reversion opportunities. Once this cleared right here, if you were so inclined to wait, here was your buy opportunity. But more importantly now, with an inside day forming, if it gets through 92.08, and we go here to the weekly chart, just so you can see the history here, there's no reason why, if we get through that, we couldn't possibly, especially if we get through the higher end Bollinger Band, continue to see wood get super, super expensive. Now let's switch to the softs. I've been very interested in wheat. We're going to go back to a daily chart here. And you can see the momentum is dying, and so is the price. But we are still very far from the Bollinger Band here. So I'm going to be very interested to see what happens as we're getting closer to the support level at around 690. We break 690, I'd stay away. But if we hold 690, and particularly if we start to see the momentum pick up, again, you'll have a low risk opportunity. I believe that food commodities are still very much in play, and this correction could be a really good low risk opportunity to buy. And so to round it up, let's also look at soybeans, which soybeans actually is weaker. This touchdown on the Bollinger Band is slightly above, just as it touched down here on the Bollinger Band here, and we're trying desperately to get a pop. So what I would look for here is a little bit more of an increase in momentum. You got 22, basically 22.10 is your major support level that has to hold. And if we can start to creep back up, let's say take out, well, we could even wait for this Bollinger Band to be taken out more like 22.80. You could do a starter position waiting to see if it can get back over the 50-day moving average. But I do believe that these commodities, and let's look at this one on a weekly basis, are really still undervalued, still so undervalued compared to the overall stock market. And still, in terms of raw materials and the way things are going with variance and supply chain, the place to be as we get into the end of 2021 into 2022. Okay, hope that was helpful. Thanks so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.